Every one of us, when we dream of home, we picture a big house which is beautiful with family, food, happiness, and joy associated with it, and one of the most important reasons as to why we work our asses off. To many, it's a dream, but fortunately for those who get to fulfill their dream. So owning a house is perhaps one major milestone to reach in the life of any individual despite being rich or poor. Desiring a house and owning it comes with expenses that go through a very fine topsy-turvy lane. And that is why I'm here today for all the would-be buyers. Hello and welcome to Economic Stories. Join our channel by hitting subscribe and clicking the bell icon to be updated on our new uploads. Today we're going to look deeply at why the prices of houses are sky high. So without further ado, let's get started. Well, during the COVID epidemic, property values virtually doubled across the country while family income plummeted. As a result, many would-be purchasers were unable to purchase a property. However, the price was an increasing issue even before the epidemic began in 2020. According to a Bankrate study of data from the National Association of Home Builders Wells Fargo Housing Opportunity Index, the median home price increased by about 30% in the previous decade, while wages increased by just 11%. The difference is far more obvious after 50 years. According to separate research by online brokerage Clever Real Estate based on census data, home prices have climbed by 118% after accounting for inflation since 1965, but income has only increased by 15%. Though with record low debt levels on mortgages, the pandemic-induced rush on houses further exacerbated the affordability dilemma for many potential home purchasers. According to Clever Real Estate, Americans would require more than an average salary of $144,192 in 2022 to purchase a home, which is significantly greater than the average household income of $69,178. A popular rule of thumb for determining how far you can spend on the residence is that it should not exceed 30% of your monthly gross income, that is, your total income before taxes and other deductions. According to some experts and lenders, the sale price of a property should be more than 2.5 times your yearly wage. However, when housing values rise at an exponentially higher rate than income, Francesca Ortegan, Clever Real Estate's data scientist, points out this is becoming increasingly impossible. After the pandemic prompted a boom in property prices, properties now cost 5.4 times the average buyer's gross income. Clever discovered that just 6 of America's 50 most populous cities had a healthy price-to-income ratio of 2.6 or less: Pittsburgh, Cleveland, Oklahoma City, St. Louis, Cincinnati, and Birmingham, and Alabama. San Jose, San Francisco, San Diego, New York, and Los Angeles were predictably the least inexpensive cities, with a price-to-income ratio of up to 9.8 in 2021. Last year as well, according to sources, it was said, "You have to make a lot of money, enough to save for a long period to be able to purchase a home," Ortegan said. Because only two assets account for the bulk of household wealth, home equity and pension savings, historically, high property prices make closing the millennial wealth gap even more difficult. We value your enthusiasm, so don't forget to subscribe to Economic Stories YouTube channel and ring the bell to be informed of new episodes, and keep watching. Furthermore, first-time homeowners are at a disadvantage since they lack the cash from a previous house sale to assist them. We're just boosting the number of individuals who will find it more difficult to accumulate capital by owning a home, Ortegan explained. Most of the real estate business predicted that the spring real estate market, which is the sector's peak season, will be a little less frantic this year as we approach 2022. After all, it couldn't be any worse than the spring housing market of 2021, when over 70% of property listings were subject to bidding wars, right? Regrettably, that prevailing view has evolved, which is bad news for would-be purchasers. Not only does the spring housing market appear to be scorching, but it's also possible that this may go down in history as the craziest spring house buying season ever. Bidding wars have already resurfaced. The season of spring shopping has arrived, and it's wild and crazy out there. At this stage in the real estate market, it's creating some annoyance. Fortune spoke with Devin Bachman, Director of Research at John Burns Real Estate Consulting. The housing market is emerging off a year in which home prices in the United States increased by an unsustainable 18.8%. So, how is it that the market is still so hot? When the epidemic hit, major real estate organizations predicted a slowdown in the home market. However, this did not occur. Instead, by the summer of 2020, the housing market was thriving as first-time young homebuyers rushed to take advantage of historically low mortgage rates. As a result of the surge in home buyer demands, inventories became scarce. Housing inventory has dropped by 32% from or before levels by the spring of 2021, with purchasers outnumbering available properties. They seem to have no alternative but to offer more than the asking amount to win. Last spring, there were record-breaking bidding wars. Inventory levels were expected to begin to grow this year. According to industry insiders, the theory was that once the vaccine was available, more senior homeowners who had been hesitant to move during the epidemic would begin to advertise their properties. Additionally, it was projected that some suffering homeowners will sell their houses when the COVID-19 mortgage suspension program came to an end in September 2021. Last autumn, inventory levels began to climb, but by November, the number of properties for sale had begun to decline again. Stock levels in January were 42% lower than in January 2020. 254 of the 327 Zillow-tracked home markets have levels of inventory that are dropped by more than 30%. Simply, the housing market is narrower now than it was in the frantic spring of 2021. There is no longer any inventory. There's no longer any patience. If you're a seller who doesn't have to buy another property and is selling yours, life is pretty well wonderful right now. You're getting a lot of offers and possibly selling it for a lot more than the asking price, Bachman explains. Every single projection model we looked at expected a sharp slowdown in a home price increase in 2022, but only 2 months in this year, that agreement has already crumbled. Zillow anticipated that by the middle of 2022, the 12-month pace of house price rise will have slowed to 11%. In January, though, it became more upbeat with the house listing site raising the 2022 housing price growth rate to 16.4%. Zillow judged earlier this month that even that rate was too modest. Now, according to Zillow, the year-over-year rate will peak at 21.6% in May, setting an all-time high, and close the year at 17.3%. Inventory levels that are tighter than predicted are the major reason for the positive view. Another factor is the rapid rise in mortgage rates. The average fixed mortgage interest rate granted in December was 3.11%. The 30-year rate has risen to 3.92% as of Friday. Rising mortgage rates may hamper the housing industry in the long run. After all, with each increase in mortgage rates, some purchasers are priced out of the market. However, the short-term consequence is the inverse. More home buyers are entering the market fearful that interest rates will keep rising. Rates have risen slightly, although they remain much below the historical average. As a result, buyer urgency has intensified. It's the concern of rising mortgage rates and rising costs in the future, Bachman said. So in the future, be prepared to see continuous growth in the pricing. Well, this is what I've dug up for you. Let me know your opinions, feedbacks, and ideas in the comments section. So now that we've reached the end of this video, hold on, make sure to leave a like and subscribe so you can join the squad and be a part of this family. Thank you so much for watching. Till we meet again, keep investing, keep loving, and don't forget to keep your family safe. Adios.